Investing in crypto is just gambling with extra steps, and if you're planning to invest your money, then there are so many better options on this tier list, it's insane. Even Bitcoin, the most stable cryptocurrency, is riskier than the S&P 500, especially in this bear market we are experiencing right now. Crypto coins are so random at times, and there are a lot of scams and rug pulls. Yeah, that's not nice. If you know your stuff, then you can make a lot of money with crypto, but when it comes to investing, it's just not worth the headache seeing your portfolio drop half its value overnight for some reason nobody can explain. So I think crypto deserves a C on this tier list. By the way, if you're planning to invest in crypto, try your best to be consistent and invest every month or every week, just like you would with index funds, for example.
Trallallero, trallallà.
Stocks are so overrated. You are much better off just putting your money into index funds instead of going through a roller coaster of ups and downs. More than 50% of all stocks have delivered negative lifetime returns. So why bother studying a company if there is so much risk of you going broke? Almost no mutual fund beat the S&P 500, so yeah, picking a single stock is a rigged game. Unless you're Warren Buffett and invested before the moon landing even happened. I'm not saying you'll lose all your money betting on some stocks, but just like crypto, there are so many better options. So why turn down the extra money? So with that, I think stocks are a C on this list. If you're a full-time analyst or an insider, go nuts. But 99% of us aren't, and I wouldn't put more than 5% into any individual stock. Do I need to explain why index funds are A tier? Whether it's the S&P 500 or global ETFs, they're the closest thing to free money when it comes to investing. But here's the catch. You can have the money, but you can't have it now. Wait a few years or a few decades if you really want to see it multiply. We all want more money now, but investing isn't about getting rich quick. It's about exponential growth for the future. It's just simple delayed gratification, and it pays off big time. Cars are not a good investment, period. No, seriously, cars depreciate like crazy, 99% lose value over time.
A few moments later.
And they're just a liability disguised as an asset. In your first year, your brand new car loses around 20% of its original value, and every year, the price on your car keeps on dropping. You might think it's cool to drive your new 50k BMW out the lot, but on that exact moment, the car will be worth $5,000 less. Having a car is essential to get to work, but you could easily do that with a $5,000 used car instead. The average car payment in America is now around $800 a month. That's actually insane if you think about it. Those $800 can make you be far ahead than most people when it comes to investing. So be careful. Cars can be money sinks or expensive passion projects. There are a couple rare cars that can be counted as investments, but most of the time, the price will crash down. I don't think it's a good use for your money if you are planning to invest. I think investing in cars is just an F. Gold will always be something valuable and scarce, so buying gold is not the worst way to invest your money, but you can be smart about it. Also, don't go buy random things made of gold that you might see in jewelry stores or online. That's not how you should invest in gold nowadays. You got a few legit options. If you want real gold, you can buy gold bars, starting from just a gram of gold. But I recommend buying at least an ounce of gold if you are investing, or you can buy gold coins, or you can do much better and buy gold ETFs, which is pretty much buying gold but without the storage hassle, and you can sell at any time. So I think gold is a C on this tier list. It just doesn't grow that much compared to the market. It's not bad, but it could be much better. This is great for beginners that don't want to pick stocks, and you can just set up recurring contributions if you really want to turn your brain off. Mutual funds are nice. You don't have to do anything and just let someone else trade and invest in stocks for you. However, there can be high fees with these services, and most, if not all of them, fail to beat the S&P 500 in the long term. So I'll have it at B. This is an automatic F. You should not be spending your money on a digital picture where the price has been artificially inflated. Do you know who makes money off of NFTs? The middlemen, the sites and sellers are the ones profiting, not the people investing in them. You may recall seeing Logan Paul buying this NFT for $623,000. Now, its value has plunged by 98% since his purchase. Don't spend your money on NFTs, I'm serious. If you have the money for it, then real estate is a no-brainer. There's so many things you can do with it. You can rent it for some cash flow, you can flip it for a quick profit, you can refinance it, or you can even rent it out on Airbnb. Although I don't recommend the latter, not having long-term tenants can be an issue in itself, and you don't believe what kind of stuff people do to your Airbnb. Also, every year, real estate has an average growth of 4 to 7%, meaning every 10 years or so, the value of your property on average should have doubled. The more you hold the house, the more money you are making with your investments. Even though you need to have some capital already to invest in, it's an essential that we always have great value, and being able to live in it makes it a clear A on this tier list. This might be one of the worst investments ever. This is a $200 billion graveyard that so many tech companies try to invest in only for it to die in an instant. Even made a stocks crash right after and made one of the worst drops in tech history. Nobody wants to go on VR and buy a digital house, especially when there is an option to buy real houses that people actually need. Obviously, this is enough for flop and deserves to be at the bottom on this tier list. Bonds are great to diversify your investment portfolio, but being less volatile and risky also means the money coming in is slower. Slow and steady income is better than no income, but if inflation outpaces your bond's interest, then you are just losing purchasing power at that point. Also, be careful what bonds you're buying into. Treasury bonds and municipal bonds are great, and you can invest in bonds directly or from bond funds. So I'm putting bonds at B on the tier list. Get it? B for bonds? No? Okay. Take this Pokemon card. It was $800 last year. Now it has doubled its price like many other cards. In 2015, you could have bought this Rolex at retail for $5,000. Now it's worth around $10,000. Not too long ago, you could have bought this Counter-Strike skin for $3,000. Now sells at $12,000. If you know the market very well, then these aren't just collectibles, but serious investments as well. There's a big problem though. There's only value in these items as long as they remain culturally relevant, unlike real estate, which will always retain value. But some of these collectibles can go up in price by a lot. As long as you have something that has high appreciation potential, as scarcity, and you love the niche, then it can be a pretty good investment. Obviously, this is not the best way to invest your money, not at all, but you get so much out of it, especially if you collect it as a hobby. Assuming you know the market and you do a lot of research, then I think it's a C on the tier list. Have you ever wanted to feel like one of those gurus in Shark Tank? Well, now you can. With services like Start Engine or Crowdcube, you can invest in startups alongside hundreds or even thousands of other investors. And you can invest in pretty much anything you can think of. From AI startups to random projects that need funding, it sounds like a really good idea on paper, except it's not. Even though there is potential for some of these startups to grow over time, there is really no guarantee they succeed. Around half of all businesses fail in the first 5 years, and having your investments in shares that you need to hold makes it hard to get some liquidity. It's a super speculative business that heavily depends on the startup's management, success, and relies so much on the market. So being this luck-based, you are pretty much gambling your money away. Being this unstable makes it difficult for me to recommend to anyone. So I think crowdfunding startups deserves to be at D tier on this list. By now you may be wondering, why is the S tier empty? That's because I reserved this spot for this one asset that outperforms every market, never crashes, and compounds over time. And it's yourself. This is the only S tier in this video, from your health to your education. Investing in yourself is something that will always have the highest ROI. Maybe you can invest in yourself through university, learning a trade, or anything that makes you better in life overall. Their goal is to level up in every aspect of your life, just like in video games you level up different skills. And the more you level up, the more money you tend to make as well. And you usually become happier. You should always invest in yourself. It will give you the best short-term and long-term results. And I don't think that there is anything better on this tier list. So yeah, this deserves to be at number 1.